6 years ago on this channel, I did a video called Why Apple Stock is Easy Money. Over the past 6 years, Apple stock has appreciated over 500%. That does not include dividends. Back May 11th, 2023, I did a video called This Stock is Easy Money. That stock was PayPal. PayPal has appreciated by 35% since May 11th, 2023. I did a video July 9th, 2020 called I Just Put $10,000 in This Easy Money Stock, which was on Berkshire Hathaway. Berkshire Hathaway stock is up 147% since that time period. I call a lot of stocks good buys. There's a lot of stocks out there I see as great opportunities all the time, right? And that's usually a good sign if I say this stock's a buy. But we're talking about there's a whole other level when I say this stock is easy money. When we talk about an easy money stock, when I say this stock is easy money, and I don't say many stocks are ever easy money. I'll call a lot of stocks a buy, but very rare easy money. That's a stock that has extremely low risk of it going down over the next 3 to 5 years, and extremely high probability that it is going to 2x or more over the next 3 to 5 years. That's what categorizes an easy money stock. Nike is now, at this point in time, I'm going to officially coin it an easy money stock. Nike has emerged as an easy money stock. We're going to talk about why. I want to explain that at the front of this video. It's very important. I'm going to take you back through history. What's going on right now in regards to Nike has actually happened before. That's the craziest part. This is not the first time this whole situation has transpired. I'm going to take you back 20 years ago in this video. It's going to be fascinating, okay? We're going to also speak about how much upside is there in Nike stock over this next few years. And we're also going to speak about what price will I stop buying Nike stock at, because I think that's a very important thing to speak about here today, okay? Now, I put my money where my mouth is. I'm buying Nike very aggressively, including today I put $19,000 plus into Nike stock. And that's something I hope you guys appreciate, is not just when I come out and do these videos and talk about this stock's a buy, that stock's a buy, right? This stock's easy money, Nike, right? But it's that I put my money where my mouth is. I make major investments. It's not like I'm like, oh, that stock's a buy, but I never put money in it. Or it's like I put $50. No. I put big dog money in all these stocks, right? You can see that in my public account over time. It's incredible, right? I put my money where my mouth is, and I hope you guys appreciate that. I also hope you appreciate me putting this video together on a Friday night for you guys. I surely appreciate you taking the time to watch this one here today. I think you're going to get a lot of value out of this one, whether you're interested in Nike or not, okay? There's one thing and one thing only I ask from you guys, and it's to hit that like button. As the sign in my garage says, smash a like button, make it glow. If you want to subscribe to the channel, you can do so. It's up to you. That's your call. But I need you to smash for me, okay? Additionally, if you're looking to access my private stock group, you want to apply to join there, I'll put that as pinned comment down there today. You can click on that, fill out a form. We'll see if we can get you access to that next week. That's my entire premium course library, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, as well as my private Discord chat with the 6, 7, 8-figure members. If you want 1000xstocks.com bundled in, we can do all that for you, okay? Alrighty, where this story starts out is very important, right here, okay? So, if we look at the past 3 CEOs for Nike, we had this gentleman, Mark Parker. Mark Parker was a CEO from 2006 to 2020. Now, Mark Parker had previously been the co-president of the company. He joined Nike way back in 1979. He worked various roles, and he worked his way up the ranks over time. He was an internal hire, and he did a phenomenal job. Nike's revenues and profits skyrocketed during that particular time frame, okay? And the stock price skyrocketed as well. Did a terrific job. Elliott Hill just got brought back into the company. He was at Nike for 32 years. He got passed over to be CEO. I don't know why the board of directors did this, but it was one of the worst decisions in Nike's history. And this is not the first time. I'm going to show you in just a moment. This isn't the first time this happened. But the board of directors decided to bring in a gentleman who used to work at eBay, ServiceNow. He's worked all over the place. But at the end of the day, his real background is in consulting. Red flag right away. CEO of eBay, a company that most people would call kind of a dead company for the past 20 plus years, red flag. And then he hopped on ServiceNow, which was just a growth animal, and anybody could have ran that company. Red flags all over the place with this gentleman, right? And he made a lot of bad decisions, and some of those we're going to go through in this video here today, right? But at the end of the day, that was a big mistake. But it's not the first time Nike's made this mistake. So Phil Knight was the founder of Nike. He led this company for about 40 years, from 1964 when he started it, from just being a very, let's call it niche kind of track-related company and running-related company, into being a juggernaut company, right? Think about Air Jordan and Michael Jordan and becoming a global brand. And so he left the company in 2004. And the board of directors brought in this gentleman named William Perez, and he was the CEO from 2004 to 2006. Red flag. If a CEO is only a CEO of a company for 2 years, likely he did a bad job. Here's what happened. William Perez was brought outside the company in 2004. Oh, do we see a common thread here? They brought an outsider in to come run Nike. I wonder how this is going to end. They brought him in to succeed Phil Knight. Perez took over as CEO during a transitional period at Nike, the first time in decades that an outsider would take the reins of power at Nike. Though ambitious, Perez struggled to navigate Nike's insular corporate culture. The legacy employees at the time were way too focused on marketing, neglecting other vital parts of the business. Perez focused on shifting his focus toward improving global supply chains and operations. Still, he faced resistance from longtime Nike executives who didn't like the direction in which he was taking things. It went downhill fast as key Nike executives quickly lost confidence in Perez after a mere 2 years, especially as the company was marred by rising costs and stagnant profits. Oh my gosh. Are you telling me we're having deja vu? Isn't this fascinating, right? What Nike is going through right now is the same thing it went through 20 years ago. It's unbelievable. It's unbelievable. And it's fascinating that the board of directors made the same mistake, right? Where they brought in an outsider to come try to run the show, all to realize this was a huge mistake and we need to find somebody in-house to run this show. Nike's a very special company, and I mean truly one of the most special companies we've ever seen in the history of mankind. What I'm showing you here right now in front of you, that's the top 25 biggest, best global brands, okay? These are sorts of brands you could go all over the world and say these brand names, and people all over the world, it doesn't matter if you're in New York City or you're in Los Angeles or you're in Alaska or you're in Canada or you're in Mexico or you're in Shanghai, China, or you're in Hong Kong or you're in Germany, if you're in Paris, you could say all these brand names and the majority of people will be like, yeah, I know them, of course. Like Apple, oh yeah, I know Apple. Amazon, I think I know Amazon. McDonald's, oh, I think I know McDonald's. Like, of course, right? Nike's a very special company. And if you look here, there's only 4 clothing apparel related companies on here, right? One is Louis Vuitton, one is Hermes, one is Chanel, right? Those 3 are all big money companies, obviously high end. Nike is the only one who really caters to the masses. Like everybody can afford a Nike product, right? These are very special companies that need very specific CEOs to lead them. If those individuals do not understand the internal culture and what makes these companies special because they worked up the ranks, they cannot have these companies thrive. With that being said, these companies are so strong, the brands are so strong with them, that they can get through a bad CEO leading the company for several years. That's what's so special about all these brands. A bad CEO could take over, make a lot of mistakes, and they can still make it out to see another day. But if you don't bring somebody from in-house, I can tell you, you bring an outsider in to run Louis Vuitton, the brands are going to go downhill quickly. You'll see that likely within 24-month span. Same thing with Hermes, same thing with Chanel, and the same exact thing with Nike. Warren Buffett has a famous quote I remember from very early on in my investing journey back in like 2008, 2009. I remember hearing him say this, and I always found it fascinating. He said, I try to invest in businesses that are so wonderful that any idiot can run them, because sooner or later, one will. And if that's not the most truth, I don't know what is. It is so truthful. But the great thing is with these sorts of brands, they're so strong that any idiot can run them. That doesn't mean they're going to run them good. They can run them downhill, make a lot of mistakes. Somebody has to come in and clean up the mess, right? But they make it through. That's the important part, right? And that's what we've seen play out in Nike over the past few years. Now, the latest conference call, I listened to that today. a banger. The conference call was so good that I would say it was even better than when Alex Chris did his first conference call at PayPal. And I thought that was a very impressive one. This is another level up. The level of detail they went into is unparalleled. If you didn't get a chance to listen to that, 1000xstocks.com, listen to the Nike conference call. It was a masterpiece in terms of Elliott Hill just coming in and knowing what to do right from the go. Elliott Hill started out, and there's a lot of things that happened on the conference call. It was like an hour, it was a little over an hour long, right? He says he met with all the big suppliers of Nike. He said he met with the league leaders. I'm talking NFL commissioners, NBA commissioners, those sorts of folks, right? Roger Goodell, Adam Silver, the big dogs that run the NFL, the NBA, all the big leagues, right? He says he went to all the major markets Nike's in. He said he also spoke to the heads of all the major retailers, from Foot Locker to DKS Sporting Goods. You go through the whole list of them, and including ones way outside the United States, all over the world, because it's not just like the United States are the only ones that have retailers, right? And he has, in the first couple months of being back, spoken to all those folks, right? And made them understand what Nike's going after, how they're positioning in the market, understanding what went wrong over the past few years. And he also said he's been very tied in, cheering for the company on the sideline, but probably knowing that they were making a lot of missteps, right? So he stayed kind of in the know of what was going on, and he was probably hearing a lot of bad stuff from, I can tell you, there's a lot of internal probably issues that were going on. Now, that he probably heard about over the past few years. So he was retired, but, a guy like that is still going to hear from all these other executives that, John's screwing up this, he's screwing up that, he's not doing this right, he's not doing that right? Now, retailers, he even mentioned specifically on the call, and I appreciate how candid he was about where Nike's at, the positioning, those sorts of things. But he said something very important here. He said, retailers feel like Nike turned their back on them. Who was the guy that called this out years ago? Years ago, if you follow me on the channel, Nike announced that they were going to go more direct. They were kind of moving away from the Foot Lockers and a lot of those sorts of companies. And at that time, I said, this is a huge mistake. This is a no-win situation. Nike's not going to win. Foot Locker's not going to win. None of these other retailers are going to win. Everybody's going to end up losing in this. Now, because the CEO came from that consulting culture, right? That's a culture of we write it down, we run numbers, and we say, oh, this sounds smart. Yeah, let's just sell everything direct. That's going to be a genius idea. We'll get more margin than if we sold to retailers, right? Huge mistake in the end. Huge mistake, because not everybody wants to go direct to the Nike app. I might personally have the Nike app and order stuff there, but most people aren't. They want to go to Foot Locker, they want to go to DKS Sporting Goods, they want to go to all those sorts of companies to go buy Nike products, right? If all of a sudden you start to hurt those retailers, right, guess what those retailers are going to do? They're going to find other brands to go promote. They're going to say, oh, Nike's screwing us. They stabbed us in the back. Let's go promote Hoka. Let's go promote On. Let's go promote Adidas. Let's go promote blah, blah, blah. Whoever. They're going to fill that space with somebody else, right? So now, when somebody goes to their favorite retailer, where they like to buy shoes or clothes or whatever, right? Instead of Nike product being there, guess what? Somebody else's product's there. That's a no-win for everybody. I called this out, and sure enough, it's all played out. And look at all the retailers. They all got hurt by this. Nike got hurt by this. It was a lose-lose for everybody. But that's all reversing. Elliott Hill now understands on a very high level, these retailers are extremely important. So what they're going to be doing is now building their relationships with all these retailers instead of hurting them. This is something that matters significantly. Now, additionally, I posted this inside the Private Stock Group's Nike chat, right, which was obviously very active today. Very active day in the Nike chat in my Private Stock Group. Holy smokes, okay? I said, men and women's running is back to growth. That's big, right? And the CFO mentioned that around 25:30 roughly in the conference call, somewhere around there. Now, the reason that's so big is you got to understand Nike's faced a lot of competition from that running space. Additionally, Nike at its core is a running company. It's a running company. I know we think about Nike and we think about Air Jordan and we think about Michael Jordan throwing down slam dunks, right? And we think about maybe LeBron James, or like whoever the big athletes were of their day in basketball, right? But at the end of the day, Nike's core has always been running. If Nike can't grow in running, there's big holes in the business model. right? Like they got big problems there. When Nike's growing running, they're back on the right track. And the fact that now in men's and women's running, as I said, they're back to growth in that space, I can tell you that is massive for this company. If they can accelerate over the next few years, then we're talking about the core of Nike's business is fixed. And I'm telling you, it's huge for Nike's business model overall, right? Additionally, Elliott Hill says they're moving the direct channel. So think of the direct channel as people going on the Nike app, people going on Nike's website to buy stuff. They're moving that to full price direct channel in 2025 and beyond. So no more like 50-50, because basically what he says is they've been discounting about half of the merchandise and then half selling full price, right? Which destroys Nike's margins over time, but additionally it destroys the retailers' margins, right? So when we talk about, the retailers saying they feel like Nike turned the back on them, it's not just because Nike wouldn't give them as much inventory, right, and as many products and key products and things like that. Additionally, if we want to take this a step further, right, if let's say Nike's discounting on the app or the website, right, and then let's say you're Foot Locker, what are you going to have to do? Well, you're going to have to discount as well. And next thing you know, it's a race to the bottom between Nike discounting product and then Foot Locker discounting and then all the other retailers discounting, and it's just a bloodbath. No one wins in that situation. I mean, you can say maybe the consumer wins if they want it, but it's also damaging to your brand, right? No one wins in that situation. So the fact that they're going to move the channel back to full price, in my opinion, is the best decision. The best decision they can make, right? And if the retailers want to do promotions sometimes on deals on products, let them do that. If they want to take hits on margin sometimes because they want to move a lot of merchandise, let them do that. And they want to do door busters and get people in the door, let them do that. But Nike, you don't personally be taking those discounts because all you're going to be destroying is your margin, your brand, all those sorts of things, right? And then putting your retailers in an impossible situation. So the moral of the story is this matters a lot more than I think a lot of people realize, okay? Now, listen to the conference call. They didn't really give 2025 guidance, but this is me just kind of reading through the tea tree leaves. Here's what it sounds like to me on how 2025 is going to look for Nike on the revenue side, okay? So I believe in this particular quarter, during this particular time period, it sounds like revenues are going to be down a lot. And the reason being is they're repositioning the brand, right? They're clearing off old inventory to get out of the channel and whatnot. So I would not expect any sort of revenue growth. It should be another big revenue down kind of quarter here, okay? Then when we start talking about the springtime, what that should likely be is revenue either down slightly or maybe even break even when it comes to revenue. That's what it sounds like to me. And what it sounds like to me is in the back half of the year, we get back to growth in regards to Nike, which will be a monumental moment that then they're back to actual revenue growth. Now, when we talk about revenue growth at full price too, this is going to be huge for the bottom line, absolutely massive. So that's the way it sounds like to me for 2025. So I have to position into the stock, right? And we're going to talk more about positioning into the stock and things like that. But I got to do that before they show the growth, right? Because by the time they show the growth, the stock price is likely going to be significantly higher than where it is today, right? Now, if you look at the latest income statement here, right, what's fascinating to me is how well positioned the company is set for once revenue turns, okay? So now with the company getting back to full price, right, and you're going to see gross margins explode higher, likely starting 2 quarters from now. You're going to see the net margins exploding higher two quarters from now, right? But they've brought down overhead expense quite a bit, and they're probably going to bring that down even a little bit more here. So we're talking about gross margins that will likely explode higher in the back half of the year, along with a much lower overhead base, right? And then once you tack on revenue growth on top of that in the second half, we're going to likely see the earnings per share skyrocket for this company in the second half of 2025 through 2026. And then I believe 2027 and after, we're going to get back to a much more steady 5 to 10% growth a year for Nike overall. But I think it's going to be a rocket ship ride the second half of 2025 through 2026. But once again, you could say, why not wait till second half of 2025? Like, if Nike stock goes down for the next 6 months, it's fine. I'll buy more and more shares, but I don't want to have to put myself in a situation where, because once you got to understand, once the cat's out of the bag and everybody understands, oh, Nike's back to growth, everybody on Wall Street's going to want a piece of Nike stock again. This is actually a beloved, loved stock, other than the last 2 years. Outside of the last 2 years, Nike is one of the most loved stocks in the stock market. So as soon as Nike starts showing those positive revenue numbers again, they're going to come flooding back into the stock, left and right. Okay. Now also keep in mind, the comps for next year are going to start being cake. In the back half of next year, the comps are cake, right? Cake comps. And then even in 2026, in the front half, those are going to be easy comps as well. So we're going to get into this situation where the comps start being super easy on a year-over-year basis. Now, you got to understand, there's more than just Nike micro-related stuff going on, right? Which is all, I think, extremely important. But we got to understand what's happened with the consumer over the last few years. The consumer got wrecked by inflation. Everybody who knows anything about economics knows that, right? You got to understand the difference between when we looked at those other brands, right? Louis Vuitton, Nike, Chanel, and Hermes, right? The most valuable brands out there in the apparel space. Those Hermes companies and Louis Vuittons and Chanel's, those sell to super high net worth individuals usually, right? You know, I would say the average person that probably buys one of those products has an income at least $250,000, if not a lot further above that, right? Nike sells to the masses. So when the masses are really hurt by inflation, they can't go buy the new pair of Jordans. They can't go buy a new pair of shoes. They can't go buy a new hoodie, right? And Nike sells to the masses. They sell all over the world, including China, right, where incomes are significantly lower than they are in the United States. So when everybody feels the inflation hit hard, a company that does business all over the globe that sells to the masses is going to see their numbers get hurt, right? And it's not like Nike's and McDonald's in the sense of like people still got to eat. Like people are still going to buy McDonald's even if like inflation hits, right? That's not true with Nike. With Nike, when people are really hurt by inflation, they're going to say, you know what, my old hoodie looks like crap, but I'm going to keep wearing that old hoodie, right? I'm not doing this one. I'm not doing this one. If they say, you know, my pair of Jordans is all messed up, but I can't afford a new pair of Jordans, that is what it is. You know, people are still going to buy a double cheeseburger, but they'll pass on the Jordans. And so now the consumer set up to be in a much better place in 2025 and 2026 versus previous years. Because now we're looking at a situation where real wages continue to increase. Meanwhile, inflation is about as dead gets, right? Obviously, there's always inflation technically in the economy around 2%, but this is like nothing. Like this is very doable numbers now at this point in time. This is where we historically trend. We historically trend 2 to 3% inflation. So we're right where we need to be. So the consumer is going to get in a better spot, which means they can actually afford to buy some Nike products in 2025 and 2026, which just adds more fuel to the fire. So when you have the micro of the company fixing this and that and this, right? And Elliott Hill getting the team back focused again, right? And then you have the macro also on top. In my opinion, it's going to create kind of a super cycle in regards to Nike starting in the second half of 2025, right? Now, let's speak about this subject. How much upside do I see for Nike over the next few years? And then we'll talk about when I'll stop buying Nike stock. So, if we look at the latest, kind of balance sheet, the company's set up in a pretty good situation. They got $8 billion of inventories. They got $9.8 billion of cash and cash equivalents and short-term investments. But additionally, they pay out nice dividends, right? Which they should be able to take those dividends up substantially over the next few years. But additionally, they've been buying shares back left and right. Right? Share repurchases of $1.1 billion, reflecting 13.1 million shares retired as part of the company's 4-year, $18 billion program approved by the board of directors in June 2022. The greatest thing for Nike is their business model is in a tough spot, relatively speaking. Like we got to put tough spot into frame. Everybody would trade positions with Nike. Every apparel company basically in the world would gladly trade places. Nike's bad times or companies, we couldn't imagine how good that would be times, okay? Let me just frame that. But the company's going through their tough times, tough stock price, right? $70-something a share, at the best time possible. They're doing an epic share buyback right now. And guess what? You can buy a lot more shares back if your stock price is cheaper. So this is the best situation for Nike because they're buying back shares at such cheap prices, like multi-year lows. Like we're talking the lowest it's been in 5-6 years, which is a great opportunity. So this is going to help earnings per share massively because they're taking so many shares off the market. So that net income starts to get back to growth in quite a substantial way in the back half of 2025, right? Do you know what's going to happen with the earnings per share? Now that they're expiring all these shares and they got this massive share buyback on, oh my gosh, the earnings per share is going to skyrocket, right? Now, if we look at the latest diluted earnings per share in this latest quarter, they did 78 cents. Now, keep in mind, this is 78 cents in bad times for Nike, right? This is during, I shouldn't say bad times, awful times for Nike. You're going to see that earnings per share skyrocket. Like, don't be surprised if this same quarter next year, I'm talking this time next year, don't be surprised if diluted EPS is $1.50. Don't be surprised. And I know that sounds shocking because that's almost a double up. I wouldn't be shocked at all. Based upon getting back to revenue growth with the expense base where it's at, and then the big share buyback, I wouldn't be surprised at all if diluted EPS was like $1.50 at this time next year, $1.25, something like that. Never mind where it's at 2026, 2027, right? So here's what I see happening on a yearly basis. I believe worst case scenario for Nike's earnings per share come 2027 is they'll do $8 in earnings per share, okay? A 25 PE is very fair for Nike over time. So if you say $8 a share in earnings per share, right, at a 25 PE, that puts the stock price in 2027 at $200. And once again, right now, it's like 70-something dollars, right? Now, best case scenario I see for Nike come 2027 is they do $12 of earnings per share for the overall year, right? Remember, this awful quarter, they just did 78 cents in a quarter, right? So if you extrapolate that out, you're at like, $3 and some change, right? $12 EPS is best case scenario for 2027, 25 PE on it, that puts the stock price at $300. $300 stock. Now, there's an argument to be made because Nike is such a high quality company that once their revenues start growing again, they should command a 30 plus PE, right? Similar to like an Apple, right? I don't want to take it that far. I think a 25 PE is very fair for Nike. So we're looking at a stock that should likely be, in my opinion, 2027, between $200 and $300 a share. So here's where I'd put the odds on this. I would say there's about a 90%, and this goes back to why I believe Nike stock's so easy money. I believe there's a 90% probability that Nike stock will 2x or more by the end of 2027, which means the stock has to go to 150 plus by that particular time. I would put that at a 90% probability. That's how confident I am. I'd say there's about a 7% probability that the stock is under 150 to stagnant, right? Somewhere around here. And I'd put odds that I lose 50% on the stock by the end of 2027 at like 3%, right? Which means the stock would have to go to $37. I think there's an insanely low probability that was to play out where I'm, it's 3 years from now and I'm looking at the stock and it's $37. And I'm like, wow, man, Nike went bad. All things are possible, but I just like what I'm seeing play out here, very, very low probability, okay? Now, where am I planning on buying the stock to? My plan is to buy the stock up to $100 a share. Once it goes over $100 a share, I plan to just hold at that point in time. When I think about how many shares I've bought here recently and how many shares I'm going to likely buy over the next, we can call it 2 or 3 months, I should have my position fully built out in Nike that I don't need to add any more shares, right? I'm willing to add up to $100 because the risk reward's there. I believe the stock's going to be a $200 to $300 stock 3 years from now, right? So, buying it at 70s, 80s, 90s, it definitely makes sense. At 120, let's say, the risk reward's not as good. If the stock goes to 140, risk reward's not as good, right? There's still upside there. There's still money to be made, but just like from my context, my standpoint of where I'm buying the stock at aggressively right now, the risk reward is not as attractive at those sorts of prices, right? So I'm willing to buy the stock to $100 a share, okay? Now, if you enjoyed today's video, I think you'll definitely enjoy these other videos I released this year. Buy ELF and Celsius stock and don't stop. This other Nike video I did a few months ago, buy Tesla stock and don't stop. That was back when Tesla stock was $180. This one, buy Palantir stock and don't stop. That's back when Palantir was $20. And then this one, buy Shopify stock and don't stop. I think if you enjoyed today's video, you'll probably enjoy those as well. Additionally, I don't know if you guys have ever gotten to see this video before. People love this video. I think it's my best video I did in all of 2024, in my personal opinion. 16 years of stock market advice in 52 minutes. If you ever get that thumbnail shown to you on YouTube, make sure you make the time and spend 52 minutes to watch 16 years of stock market advice in 52 minutes, because I think you'll get a lot of value out of that one. This one's doing well. $50 into these 3 stocks will surpass your full-time income. Geez, that one's doing good, huh? Alrighty, guys, appreciate you joining me as always. Once again, if you're looking to apply to join a private stock group, you can apply with the pinned comment down there, fill out a form. We'll see if we can get you access to all that in the next week or two, and access to my entire premium course library, Discord chat access. If you want 1000x stocks access as well to that entire research platform software, you can also get that bundled in as well, okay? Alrighty, guys, much love and have a great day.